Howdy, everyone. This is Tyler Coates with Alpha Analysis and the weekly show here on Thursday with the Honest Analyst. And we've got Fibbo Swanee here to my side, and Joe Saz is with us as well. He should be back in a minute. There he is, looking sharp in his gray hoodie there, if I do say so myself. Fibbo has, I guess, calm down his wardrobe colors a little bit.
I'm boring. I'm boring tonight. Just going with an ugly sweatshirt.
I like it. I think we're kind of all matching here. I think we're looking good. So it's definitely going to be another good time to look at some charts. It's been a while since I have not said that. You know, sometimes there'll be just months where just nothing happens, and you're just kind of stuck in just this little area where there's just nothing we can do but sit and wait and kind of, you know, wait out the liminal space or whatever the case may be. And then there are the other times where there will be months of just consistent volatility, which is something that is, you know, some that we wait for, and then when it's there, it can just be gone before we realize it. So it's as I say, it's another good day for a show. I'm not taking for granted how many good days we have had since actually starting our Thursday stream here with the Honest Analyst, and so it will be very interesting to continue along and see what happens next. And there are no two guys that I would rather do it with than you two. Maybe a girl or two I could think of, but out of the guys, you two are it.
So yeah, I can't help you there.
Nope, you give me some good tips here and there. Definitely some good tips. So you're helping. You know, you got analysis for all of it. That's something that I've done.
All right.
So how are you doing this week? You have a good week? You listening to any good music? What's been going on with you?
Actually, I've been pretty busy this week. Just with work and just kind of hunkering down here and just been in front of the computer screen pretty much all week. I mean, it's been kind of crazy. The Lord Huron, I don't know if you listen to the Lord Huron or not, but they came out with a new single, and I thought it sounds pretty cool. It actually has a little bit of like a Elvis tone to it, but I like that group, and that's one new song I heard this week. So speaking of music, other than that, it's been you know, heavy metal. When I usually do charts, it's, you know, I'm listening to thrash and death metal and a whole bunch of other crazy stuff. It gets my mind flowing.
It works very well with how often there are kind of crescendos in that music, as well as with the markets. They can mix very well with each other. When you said Lord Huron, I just assumed that's what it was, but after a quick Google, American indie folk band, which sounds right.
Yeah, they're not heavy metal, no, not by any means.
I'll definitely have to check that out here. I've got that on my tabs. So what about you, Joe? How have you been? You been hearing any good tunes lately? Oh, I think you might be on mute.
Yeah, I'm listening to good tunes. You know, I'm such a Daft Punk fan. I go back to Random Access Memories a lot. I really can listen to that like regular, just all the time. But
did you cry when they said they were quitting?
No. I think they've done an amazing job with their career. Like they kept it simple. Like they didn't come out with like too many albums. They didn't like burn themselves out. You know, they were really about owning their own music. That was the only reason they ever signed a label. They were actually really true to the core musicians. Like no one ever owned their music, only they did, and that's kind of why they were like kind of undergroundy yet still mainstream. You know what I'm saying?
I got you.
Yeah, so I like love Daft Punk, love them. But let's see, you know, anything else? I'm thinking, you know, I love that one Amy Winehouse, man. She got some soul when she sings, man. She's a master, and she sings this one song called Valerie that's like done by another group, and I hadn't heard that song in a while, and it popped up in my YouTube thing. I listened to that, and I was like, damn, man, there's some good soul music out there. Been sleeping.
Well, Definitely appreciate that. When I was wondering if you'd heard any good new music lately, I was thinking you'd maybe mention somebody that was still alive or a band that was still together. So, sometimes you got to find what you like and stick with it. So I appreciate that for sure.
I don't know. I'm just like, there's no real good music. Lo-fi hip hop for sure. I like lo-fi hip hop, which is just kind of like a genre, and it's like a YouTube live stream, so you can put it on and it's just beating all day and it's chilling. And you might actually really like it. Lo-fi hip hop live streams, they're sick, man. It's just good chill beats. But I'm sure there's thrash metal beats all day. Thrash metals live streams all day. There's like 80s power metal all streams all day. So sometimes I'll get caught up in like lo-fi hip hop or something like that, cafe jazz. That's the new stuff that I say.
Excellent. I like it a lot, and certainly will be continuing to explore some new good music myself after the recent, everything that's happened in the last year or two. I feel like we're going to see a big wave of inspiration from artists who are, the ones who use dark times to create art, and then the ones who are just kind of inspired by trying circumstances and they want to inspire others. And I've started to see some just an incredible music coming out lately. So definitely am gonna continue to try to find some new good music. I think that this is the year. 2021 will be the year of inspiration, and I will continue looking for that where I get the chance. So thank you guys for sharing there. I'll definitely be taking a look at Lord Huron and dabbling into some more lo-fi hip hop, and we'll be interested to see what you guys are thinking about the charts. So Fibbo, why don't you go ahead and dive into what you're looking at? We're right now at about 46.5 as prices kind of approaching horizontal support, and it's moved down pretty quickly.
Grab me access. Grab me access, please.
I should be able to do that like by default, but I don't. So
it just resets every time.
Yeah.
Yeah, they made an app to where you can share screens and stuff, but they just allow it to not ever happen unless somebody else says it's okay. All right, let's see here. All right. Where do I start? Let's go with well, since we're moving on the downside here, we'll start on the short term for me, which is the hourly. Couple of things here. This fib here, I'm just taking the low that we had the other day up to the latest high here. I'm going to rough it in, but it's right around 52.1 or so. And the 61.8% level is at 47.6, which we closed once. It went up there and just touched it, and we're working our way to the downside. So right now, I'm still looking at this level as the the possible fib extension reversal level, and that comes from the fib levels from my threshold. The threshold point back here when we went into the bull zone, the red fibs here up to the top. Once this broke down and went past the 100% here, the 127 to 141 range is this area that I think that you'll find a lot of buying interest and try to keep it. And when I say reversal, I got to figure out another term for it, but it's really just this leg down. It's a reversal from that point, and it definitely went up and came back down into this range and then started to take off to the upside, but we never really got going past all these moving averages and hit some resistance, and now we're working our way back down. But right now,
how about we just call it support, like possible fib extension support? That's what I'd label it. Is that worth it?
Yeah, that makes sense. I just I always look at it as a reversal, like just off the reversal of the leg. That's why I look at it. So that's the first word that comes into my head. But yeah, no, that makes sense. I mean, this basically is just the support area from this latest leg to the downside. But right now, the low right here is the 100%, and this is where I think we could probably get to again, which is right around 44.8. That was actually my original. I did buy here, and sold a little bit up in here, but I'm still about 30% long, for my short term at the moment. But my average right now is about 43.8. So I actually have a break even stop on at least 10% of that, for now, in case this thing falls out of bed. But right now, I'm still liking this zone, for some buying interest. Now, if this ends up, breaking down, I'm going to look into this next fib level down here, where the 41 to 42 range would be here on the hourly. I actually like the whole basically 40 to 43 range, as a possible, local low on the way down here. That's where I would really like to do some buying if it got down into that area. But this area I'm gonna look at first.
Sorry to interrupt you.
No, go for it.
You just mentioned, and I now I'm forgetting after going through those other numbers. Where was the stop that you were talking about in case it falls out of bed?
At 43.8. That's just my break even stop for that I have on an average of a long.
That's what I was wondering, if you would be getting kind of stopped out before getting to that area where you've got a lot of buying interest. So that's
yeah, because I feel like if we get to 43.8 on this leg to the downside, we could probably go all the way to 40, maybe even 39 or so. So I wouldn't want to hold on as much exposure, if it starts to do that. And I'll show a little bit more on the 4 hour on why I would do that. But right now, I feel like this is still a good area for buying interest. And one of the reasons is when you look down at the RSI here, I'll kind of make it a little bigger. We went into the bear zone here, and every time that we dipped down out of the red zone, and then it popped back up. Let me get this where it won't show the stupid little markers or whatever. When it dipped down out of the red zone here, the bear zone, and then it came back up, this is when we had those really large wicks. So there was a lot of buying interest once it came back up out of this, came out back up into the red bear zone. And it did it here too, where it popped up and it really got some buying interest going. And right now, as it's starting to approach this full retracement level at 44.8 again, which is kind of in the middle of this, fib extension support area, it's going to break down a little bit underneath this, and get into a little bit more outside the bear zone, or a little bit more overdone. So it'll be when it pops back up into the red, if it gets down there and pops back up, would be a buy signal for me, on the near term. But I feel like if it gets down into this and makes a full retracement at 44.8, it'll be underneath. It'll be something to watch, because if it doesn't and it stays overdone for a while, that's when I think we can drop into the 40 area, which is going to be a lot of confluence on a lot of these different time frames, and I'll show you here. But that's really all I'm looking at on the hourly right now. Is we were in this. I have this blue area in here, and it's really just an area of consolidation. And we were in this this area right in here. Is just kind of this no man's land that we were. It was bearish, so you had to be cautious that it could go to the downside, but it was also very low momentum, and an area of just kind of just chopping back and forth. And then it finally broke down out of this range earlier. And then it started to break down even further and got some selling interest. But now we'll just have to see how far it really goes, and gets there. So I'm sticking with this level here as a possible hold, and we'll just have to kind of see how things play out in the next few hours. But it's the 4 hour that's very interesting to me at the moment, because the way I do my threshold theory is, you go with a threshold break first, which is a break for the RSI into one zone or the other. And in this case, we broke down into the bear zone, right in here. And the next thing I look for is that you have to have 3 closes below the previous 38.2% level. And on this latest, since we were in this large bull, it was in a bull zone for a long time, and then it finally broke down. The start of this threshold was back here, And then you take the high and the 38.2% level. It's hard to see the number, but it's 48,293 on the shallow fib right here. And it definitely went through and then came back up and closed above it, went down, and then came back up, closed above it. And it never got 3 consecutive closes above or below the line. Now, the interesting thing is we had a close below the line just last candle or the candle right before we're in right now. And so we got 1 close below there. So since we're in the bear zone, the 3 closes below this would not be a good signal at all. So I would actually sell some of my longs if that actually happens, to where the 42, or what would happen is if this closed 3 times underneath this line, the 42K at the 61.8% level would come into play as your next level to watch for. So this would be 42 to watch for, to see how price approaches this. If it's really nasty and the momentum gets all crazy and all that, then a break of that would bring us back, it would be a long way down to like 32 or so. But right now, this level at 42K is what that's the area I would like to do some buying if this actually broke down. So when you look at the hourly, if you get down into this area right in here, if it goes through the 100% on this and dips down into this extension, it's going to put you smack dab in the point where this 61.8% level kind of matches up. But if this doesn't close 3 days or 3 candles underneath, then I think this is the area that will probably hold. And this is that low that we just saw in the hourly right here, where it's going to do the full retracement and bring us into this area. So this is the area I'm looking at first. But if we do get a close underneath with this candle and then the next candle as we move into later tonight, and it's underneath, then I'm going to unload a little bit and take some exposure off. I won't do everything because I'm always leaving about 10% to the upside right now. Because I mean, my average on all of this is 43.8. So if I end up selling a little bit up here for profit, I can leave 10% on there for now, unless this 42K breaks to the downside. So that's what I'm kind of looking at. And this 42 is an interesting level, because when you start looking at other time frames, this one actually goes all the way down to 40K on the daily, because right now they're still in the bull zone. So I got these arrows here watching to see if we break out of it, break to the downside or not. So same thing here, would have to be a break into the RSI. And if we get 3 closes underneath 40, or 3 days consecutively under 40, that would be bad news from what I look at. So I like this if it wicks down into the 40 area. That's why I said I like that 40 to 43K area as a really pretty significant level for me. So that's where I'm actually kind of looking to probably add some more longs, depending on how all this plays out. But that's the area I'm looking at the moment. Interesting thing on the weekly, this blue line here is one of them I've been following on this RSI. And last time when this dipped down, it held at the 38.2% level. So if we were at this high over at this point in time right here, anytime it was above this line, it would hold the 38.2% level, and that's what it did right here at 28.8. And that was a pretty significant buy for me right in here. And then now that we're looking up here, this is what's interesting to me, because the reason I like that line is because back here, as I kind of showed this before, there was an area on here. It's this little area right here that was kind of flat, and it was when we were at this level right in here. We were looking at this leg, and the 38.2% level held when the RSI stayed above this blue line right here. If I drew it all the way out, it's right at this point, and then it broke down and it went straight to the 61.8% level. And that's what I was kind of looking at when I was looking at this point right here, was if it held here, the 38.2% level should hold. But the interesting thing is this time it's actually breaking the line, and we're not even at the 38.2% level yet, which that's very interesting to me, that with the more selling interest that we're getting at this point in time, we're not even there yet. So to me, this 38.2% level at 38.5 becomes pretty good floor going forward. Now we're going to keep an eye on this, and of course this is a weekly, and this thing can pop back up or go really strong to the downside. But right now we are starting to break this line, but we're nowhere near the 38.2, which is kind of cool. So I actually like that as a longer term bullishness. Not that we can't drop to 40K or so, but I like the longer term look for this to hold with a move to the downside. And given all of that, this is what I'm really this is where I really want to see how we end up on the week. I've been following this one for a while. This midline that I've brought this up in the last couple of calls that we've had here on the show. The midline is what I'm watching, and I'm going to blow this up so we can see it a little better. But right here at the midline, we came up and we closed 3 weeks above it. We actually came back down and had a nice little retracement on this leg right here, right to the 61.8% level right here. But it popped back up pretty quickly over the next couple of weeks and closed back above it. So we didn't get 3 consecutive closes underneath here to bring it back bearish. So since we had the 3 above it and not back below it, that means the whole trend was continuing to the upside. So now where we're at right now on the midline, well, there went my midline. Let's see. There we go. The one thing we've seen so far is wicked up right here, but we've had 1 week, 2 week, and this is the 3rd week. And if you go right down to this line, that's right around 42.4 at the moment, which is right in line with the 4 hour here at 42. The extension down here, if it kind of breaks down a little bit into this area. Not to say that it'll get there, but it definitely has a really good chance right now to get down into this area. So if it gets down in here and closes above this line, then all of a sudden this midline becomes really strong long-term support. Doesn't mean it can't go back through it to the downside and maybe go down and test 40K or 38K over the next couple of weeks like it did back here. It's just we got to watch to see if it does it for 3 weeks in a row if it gets back down there. So there's still some downside. I'm cautiously optimistic. So I'm definitely watching for some of these lower areas around. Basically, like I said, I like that 40K area. But if we can get another settle above this, and I know we got a few days left, it would be nice to get a settle above this. If it doesn't, then we're going to probably retrace back into probably the low 30s. Would probably be an area that I would look at. But I'm really hoping that we settle above this, and this keeps really good, strong support. And there's a lot of buying interest right here, and it holds it. And I think that would be a really good sign going forward. But of course, it's Thursday, and we got to wait till Sunday close. And who in the hell knows what's going to happen until then. So, but that's where I'm at. Still cautiously optimistic. That's the way I like to put it, because we're really not breaking and slamming new lows just yet. So we've been consolidating and just kind of like when it gets into this kind of area, this is my liminal space. I don't really care what happens in here because I'm not really doing anything. I'm not really trying to buy or not really trying to sell. I got my stop in at my break even in case it gets all nasty on me, and just hoping that it would break out and find some buying interest. But in this case, it didn't, and kind of got a little weaker, but not weaker to the point where it's breaking new lows just yet. So I'm staying cautiously optimistic. So that's where I'm at.
Cautiously optimistic. I like it, and thanks a lot for sharing your analysis there.
Any other questions or comments? You guys all good with this, or you guys pretty close to seeing the same?
I'll be commenting as I go along.
Okay, cool. All right, yeah, that's all I got, man.
I'll sum up what I'm seeing to make sure that I shouldn't have any questions myself. It sounds like you are Looking to hold through here as long as this low doesn't break down. And if that low does break down, then you are going to be looking to get stopped out and looking to re-enter in the 40 to 42 range. Is that about right?
Yeah, yeah. I mean, right now I'm not doing anything. I'm keeping my 30% long. I'm at 43.8 average, and hopefully that this whole area in here finds some buying interest, and we kind of hold this and take off from here. Right now, it's held this RSI at the moment on this last hourly candle, so maybe we're going to get a little bit of bump. I don't know. There's not a lot of bullish momentum, but it didn't break down right here, so that's the first good sign. It's not a buy signal for me, but it's the first good sign that we had on this move to the downside. So maybe we'll start to see something. But like I said, cautiously optimistic. So gotta stick with it.
I like it. So let's hear what Joe's seeing.
All right, let's get the party started.
Launch it, Joe.
Give us a couple of waves of the wand first.
Yeah, somebody commented out on the somebody commented that I need to get a vape or something because I feel out of place with you guys enjoying the smokes and I have nothing.
Yeah. What are you, a nerd?
Yeah, you dweeb. So yeah, this is the most recent. I wasn't even watching when this was happening, but minute by minute we fell into the gold mine. Let's see how that looked. Now that's actually pretty good. I think that's higher. Let's go to a 5-minute real quick and zoom out. Ooh, a little sketchy. I mean, the gold mine really kicked in lower. So basically what I was gonna say, the crossover to me and Fibbo was that this range has tons and tons of support. Tons and tons of support.
What range? What range are you talking about? What price range?
Greater than 40,000, like 41 and above right now is about as much as I could see clearly. Okay. But I would expect that this range to hold, like the 43s to hold at the very least. That's where I'm at too. That's good to hear. Yeah, I'm expecting that to hold at the very least. I'm not saying we're gonna get there. I'm not like in all confidence certain we're gonna get there. This is the bottom end of a ruby mine. I don't know what this is. I'm just gonna get rid of it for now. But this is like the bottom end of a ruby mine that was drawn over here, which was broken on this dump, and then it was supported again with more strength this time around than there was last time around. So the market has had time to recover and get a little bit bullish in this range. So accumulators are stacked up. So I'm happy to see that we're not just holding at 43, we're holding at the mid 45s. That's pretty much, that's really, really tough potatoes there. But I'm happy to see more support came in along the way. It makes me think we're going to bounce. I still have a bounce target of about 53K. I think we're going to come back up here, but this is the thing that does make this market a little complicated. And, like with your liminal space, we did have signals, and that's what made me so confused, was that I was like, whoa, sellers chased this run down. I could not believe that as we were bouncing out, we had sell dominant ratios capping us out of bounces. That's really, really interesting sign to me. And we had some great signals leading us into some good scalps, some good long-term stuff, or long-term for me. But I'm happy with this bottom. It looks like it was a stressful bottom. I hope it didn't ruin anyone. But this was a rough ride down, and it's been rough rides. I'm actually not really trading with leverage. I'm trading with spot right now, just because I'm really like not comfortable with the market right now. So, just wanted to note that. Not really trading with any risk. But yeah, the support is looking strong in this range. Double bottom there. Maybe a little bit higher than the previous low by a little bit there, but still, let's just call it a double bottom ballpark. I do think that paves the way for us to get to 53, but let's see what sellers chase the book this time around. I mean, this could have been like a massive accumulation, a confirmation to some people that, that the bottom of this little pullback is in or something. So let's give them a minute to recover here and see if any sellers chase the book. But that's pretty much where things are now for me. I'm looking for a pullback to like the low 50Ks. I thought 53 was really possible. I still think it is. Now that we've double bottomed, I'm a little more skeptical about 53 and a little more optimistic about 51, 51, 50, 52 range. And then that's where I want to reevaluate. I want to see how many sellers have chased the book and like what kind of market we're dealing with. What it's done to the macro picture. Obviously I'm not the parabolic line drawer, but there's definitely a parabolic line in here, and I wouldn't say it's quite broken. Maybe it is. I don't know, but this does have me a little bit worried. I still believe in Bitcoin. We still have a lot of fundamental reasons to be bullish. There's still a lot of support in the book, so I'm not about to get bearish on my corn. But yeah, we have tested the 50 not too long ago, and a snapback could certainly do so again. So that puts us in the low 40Ks. The support that we have on the bottom end puts us in the low 40Ks. Pretty much everything I have is saying that the low 40Ks at the very least is going to be strong support. And I would always give room for there to be a wick to the 30K. So I've been saying that 38K is a possibility in the event of like a really hardcore panic sell-off. But there's just so much support right now. I think it's accumulator support. I don't think this is dynamic in nature, but it's clearly dynamic becoming static. Whatever orders stacked up in the meantime between this bottom and this bottom were stronger when we came around a second time. So these are definitely like interested buyers. So I can only assume what we have below is sleepers, like really, really interested parties. Not going to pull their orders. They're not scared. They want to accumulate at those ranges. Those are their serious accumulation zones. And yeah, so I think the low 40Ks are looking really good for support. This range is looking really good for support. But yeah, you can see that the market is in a liminal space itself. Our bands have been flipping. They've been tight. They've been flipping in and out. Had some good bottoms. Confluent bottoms in the spot and perp markets. Had some good dual band confluence, some good dual band confluence periodic points there. But you can see the dips are getting really, really interesting for perps and spot markets to get in confluence and really buy us out of those messes. So I'm gonna keep leaning toward. It takes a lot to hold price up, and it's taken 3 bands these days. I remember the days when a single signal like this was enough to trade, and now it's like you take a single signal and it's a sketchy ass signal. So right now on the bottom side, the bulls are getting tested with all their resolve, and yeah, let's see what the sellers have to respond. But the bulls have made their answer. I think we're going to bounce up out of here, and let's see where the sellers start to stack up, and that'll be where I want to start thinking about how strong are they as they stack up. Are they stronger this time around? Have they pulled back? Have buyers come back stronger? So we're pretty much at a critical moment right now, where a breakdown is certainly possible, but I think we're getting something to the 50Ks at the very least with all the support that just showed that's been here and growing. I think a bounce to the low, like the 50K range is absolutely on the table.
Excellent. Well, thank you as well for all of your analysis, and something that I was certainly paying attention to as I do every week. And the main thing that you said that caught my attention was that you're currently just trading on spot, and that's actually something I don't think I've ever heard you say before. But last week on the show after you had left, Fibbo and I were talking about how this is just not the time to be trading on leverage, and that maybe there are some times. We're not saying that never do it, but we are saying that right now is not the time to be trading on leverage. And then to hear somebody who I've never said ever that I'm not trading on leverage come to that conclusion, on their own volition, that's the type of thing that really shows me what separates the triers from the doers, and the guys that are always missing out or are always over leveraging at the wrong time, and then the guys that are consistently making good money on good trends. are then knowing kind of when to pull back and pull the reins in on the horses and just say like, look, I'll still take some signals and trade here and there, but this just is not the time where I want to be risking really anything at all. So that was the main thing that you said that jumped out at me, and it
there was $4 billion. There's I think it was probably more than that, but there was billions of dollars on that wick the other day. That was a lesson probably for a lot of newbies out there that were probably leveraging at the wrong time.
Yeah,
and it
keep
dropped.
Talking.
No, I think it was just a couple of days ago. It's that long wick.
Yeah, I know what you're talking about. I'll pull it up real quick while we're in discussion mode.
That right there is a perfect example of why you should be leveraging right now at this point in time.
Exactly right. And and the other thing is that people think, well, what if I was just short there? Like, what if I was just leveraged short? And if you were trying to get short for that move, you would have been doing that at 18K, 20K, 24K. You would have been totally done before that move happened. Whereas if you were missing out the whole way and then really looking for that last leverage opportunity to really increase risk, that's where those really sharp wicks happen. When it seems like, a lot of people are like, why did that happen? What was the news? What happened with Bitcoin? Where it's just really, it's increased so much so fast that people get too confident in taking too much risk. And the market's just going to take care of that in a matter of a few hours.
Yeah, if we looked at this on a 5-minute candle, it would probably be around 50 million in liquidations just in that 5-minute span of time. On a daily, in that day where we had that wild wick down, this kind of started the whole mess. And that was like a failed reversal. I mean, I'm going to try to get to it on like a smaller time frame. It might have been back here even a bit further. Shoot, I'm probably losing.
Nope, it was right there. It was right there on the 30-minute.
It was that one.
Right. Yep. That one.
Sorry, I don't go to timelines this big. On a smaller timeline, this was actually green. This was a green reversal. So we liquidated 62 fucking million longs in that one candle. 62 million longs liquidated in that one candle. 30 minutes.
Do me a favor, real quick, Joe. Can you pull up the ETH USD chart for Kraken?
ETH USD chart for Kraken.
And the only reason I'm asking real quick is because how much money was lost on that? Everything you're saying, I completely agree with and is very true. And all the money that was lost on that, I think there was exponentially more lost on Ethereum. On Kraken, just out of nowhere, in the blink of an eye, it wicks down to $700 from 1,800, from 1,600 in the blink of an eye. So even if you're trading with 2x leverage, you're liquidated before you can even take a breath in. And this is the type of thing that, I'll see people consistently complaining about it. And you just like, how could this ever happen? Being in complete disbelief. But the reality is this shit happens all the time. And every time we get a really big, strong move up that makes a lot of people a lot of money, we end up getting some really weird stuff that happens like this. And in 2017, Ethereum wicked down to 1 penny on Coinbase. So wicking to $700 on Kraken is just basically a drop in the bucket to what we've already seen. And that's the type of thing where even if you just enter like 5%, 10% of your account on 3, 4, 5x leverage, and that type of thing happens one time out of 1,000 times, that's all that it takes. And if you're not going to be able to protect yourself from that one time out of 1,000 times, then there's no way that anything you use will ever work in the long term, because that 1 out of 1,000 times is always going to happen.
Yeah. All right. I got it up. We didn't get a wick down that.
That's the Binance futures.
Yeah,
you just had it up on, you had it up.
I know. I was looking at it. I just want to see. We had 93,000 ETH liquidated. 93,000 ETH.
Did you pull up that Kraken? This is Binance. Yeah. That didn't go below 1,000.
Oh, but I don't have liquidation data for a Kraken.
Okay.
Only
so this is, and I don't either, but I'm just thinking in my mind, who in their right mind had orders set to buy Ethereum at $800? Like I had orders set to buy Ethereum at $800 6, 7, 8 months ago, but like who is going to risk their money on Kraken? You have to reserve your capital to have an order. So if you're going to put
that's preparing for a bear market already.
But right, yeah, but I mean, if you're preparing for a bear market, you'd be looking to short. If you are going to like say have $100,000 that you want to buy Ethereum, and you're going to put that in an order at $800 when the price is at 2,000, you've got to think that there's basically zero chance of getting filled. I mean, like who in their right mind had orders to buy that shit under $1,000, whereas who else was buying it above $1,000 with any leverage? And that's just all that it takes is one little wick and one little blink of an eye to. I think that wick on Kraken wiped out more money than what we saw in Bitcoin, even though it's a relatively reasonably sized exchange on a not even the biggest market cap. That wick to 700 ruined. I think there was so much more money lost there than we've seen on Bitcoin recently. And I guess that was just something I wanted to touch on. That all it takes is one wick on one wrong chart, and that's it.
Yep. I agree. That is all it takes. Let's just see what else happened. We had another 5,000 Bitcoin liquidated. 5,000 times 50. It's like 250 mil.
Yeah, I mean, there's a lot of money lost, and I think that the people that were trading on leverage over the last couple of weeks, that's where the money was lost. I mean, the people that lost the money trading spot over the last couple of weeks, they probably didn't lose that much. If they were just trading on spot, they've probably been trading on spot all the way up and, were ready to take a loss once it happened. But the ones that were trading on leverage, that's where those cascading liquidations happen and those weird wicks that don't seem to make any sense. The money's being lost in leverage trading. And that's just something I'm very certain of, that the main sellers of Bitcoin are people that are getting liquidated. Nobody wants to sell their Bitcoin, really. Nobody wants to say that, Bitcoin isn't worth this, or, I'm ready to sell. But how many people are just consistently getting liquidated, and how many millions and millions and millions of dollars? That's where the sell pressure is. It's just people getting liquidated. And I think it's a very, very, very important thing to touch on, that it's like it's like the fine print. Like, where's the fine print of all the stuff that we talk about? If you implement 99.5% of it, but you just use too much leverage at the wrong time, then that could be it. So it's kind of the fine print of what it takes to make it long term is to manage risk. And I try to say it as in many ways as that I possibly can. And when I hear, the people that I respect and the people that I talk to who are, like yourself, you weren't in our conversation last week when all that we were talking about was not trading on leverage in this environment. And then here you are, for the first time that I've heard in a very long time, or if ever, say, I'm just not even trading on leverage. So to me, that just shows me, kind of what really does separate the people from at the end of the day. And that small little detail is something that, I want to harp on as much as I can.
Yeah. And I will say it's been a long time. It might be 2 years since I said something like that. I've been willing to dabble in these markets or sit out at times, but never for more than probably a week, maybe two. Damn, yeah, this is one tough cookie to play, and spots the safest way to play it. No liquidations. We've got, I don't need to beat a dead bear. You said it all. Well said.
I appreciate it. I'll go ahead and dive into some charts myself really quickly. I have, you guys been watching my stream over the last week or so. I've been sharing very, all the details about where I'm buying and selling and what I'm looking to do. And something that I was really interested in when Joe was kind of looking at his analysis was talking about some sellers kind of chasing the book down in this area. And that's exactly the situation that I found myself in when I did not get as much filled on my sells that I wanted. I was looking from 55 up to I think 56 and a half, something like maybe even 57. I had some sell orders layered up in this area, and I got maybe 10% of it. I got one order filled maybe for 20%. So that leaves me in this spot where, I had entered a long down in here, and now I also, it was just a very, very tricky spot for me because my target that I've been talking about every day of the week was 58.5. And that's where I was really looking to exit a big portion of just this little swing trade that I was entered. And the price got within, a whisker. and this is the type of action that starts to worry me. Like, this is the type of action that I have gotten used to preceding, some significant moves where we get very close to where I'm looking to exit, and I get none of it, and then it kind of reverses, and then I kind of stay patient. So I don't really chase it down right here. I just kind of stay patient and also not greedy. I'm not looking to target new highs or anything. I'm just looking to get a reasonable price, and then I miss out here, and I miss the majority of what I'm wanting to get here. And that's where I have seen, some moves like this happen, where I just kind of think of, if I'm missing a lot of fills, then there's probably, a lot of other people kind of in the same spot. And as you keep missing these fills, you start to become more and more worried about, what could happen before you end up getting out. And that's a spot where, and here I started chasing the book. I was selling anything above 50,000. I was just happy with, because I felt like if we were going to, support it, we would spend some time consolidating there, or it'd be like a bounce up and kind of come back down. So I was feeling good about this. And I think it was the last episode I did by myself earlier this week. I was talking about how once I start chasing the book, I want to be very, very careful not to chase it too much. Because when you start selling and the price starts really moving hard, it's easy to just kind of just sell too much at the exact wrong time. And so once we kind of fell below 50, I quit selling, but I still had a good amount that I was looking to exit. And here I targeted, it was 50 to 53 that I had my orders set. So I did end up getting out on this little bounce here without my top order getting filled, which is kind of another signal of weakness to me. And it's kind of a sign of front running, where people are just, instead of really being patient and looking for the best prices, they're starting to kind of chase it down, being just so happy with whatever prices they get, because it's gone up so much in such a short amount of time. So that's right here where I really started paying attention to some sort of bear flag. And now that I have exited the spot exposure that I wanted to exit, which was my entire trading account, along with damn near 50% of my long-term hold position, which was the first time I've sold any of that since the winter of 2017. So that was, it's not an easy thing to do. When you get into an investment and the investment moves in your favor, the first thing that happens, you get married to the investment, and it just gets really, really, really hard to get out because it's, you just get attached, and that's what happens. And as I was, looking at these prices over the last week or so, there was nothing in my mind saying that, like, I don't believe in Bitcoin as much as I did before. But what I was talking about was needing to rebalance my portfolio. Back in here, back when we were around 10,000, I was maybe having 40% of my net worth exposed to Bitcoin, 40 to 50, which is just a lot, and the only reason I'll do that is because I'm young and risk adverse. And then after we get a move like this, well, now all of a sudden I'm looking at my portfolio and it's like 85% of my net worth is exposed to Bitcoin. And that's just something where, I'm not sleeping well at night when that much of my net worth is exposed to an extremely volatile asset. So even though I still very, very much believe in everything that I always have been, I never, said that I was just hodling. Like for me, a hodl was hodling to a goal. A lot of people talk about Lambos or this sort of stuff. And for me, it was just always about being able to get into this position where I can, own some land and set up a life for myself. And once it reaches those levels, yeah, for sure, I can see all the reasons in the world why it's going to go higher. But to me, I am not feeling like that is a bet that is in my interest to make, due to just how I view risk reward and diversification, that sort of stuff. So now I'm in the spot where I'm just kind of waiting to see, is this going to keep moving up? If it does, great, because I still, after making that big move, I'm back to having about 40% of my net worth exposed to Bitcoin. So this thing just moons from here. There's nothing that would make me happier, because then, that will very much increase my net worth much more than anything else could. But if it does, kind of decide to stall out or move down, then I'm in a good position to sit on the sidelines, wait, pay my taxes, and then just look for, another really, really good opportunity, or just be very, very happy with what I have on the table myself. So this bear flag is something that is a pattern that I pay very, very close attention to, because they're just like, there's a handful of implications that it gives me, that it kind of gives me a roadmap. And that's what Fibbo talks about a lot with the Elliott wave, what I talk about with Hyperwave, and having some sort of roadmap for things to look for me, that's what keeps me a step ahead of the game. And it's kind of like thinking like a chess player, like the chess players who are thinking 2 or 3 steps ahead are always ahead of the guys thinking at this stage, whereas in trading, it's generally the guys are like 1 or 2 steps behind, right? It's like, oh shit, I bought up here and I didn't get stopped out here. So you're 1 or 2 steps behind. For me, if I can just stay, not behind, but maybe even 1 or 2 steps ahead, that's what I talk about with some sort of roadmap. So when I see a bear flag, I look for a couple things. The first is that this is an ascending triangle. The first thing I look for is this is not a bear flag. This is an ascending triangle. So I see, do we break out to the upside? If so, then we measure a target. And if we have an ascending triangle in a bull market after a pullback, regardless what this target is, I'm just going to target local highs and assume that we're ready to at least test or break through. And in this situation, we see how that lines up pretty nicely. So in here, this is not a bear flag, this is an ascending triangle. But once you break it to the downside, for me, this is where it becomes a pretty darn textbook bear flag. And from there, 2 things can happen that I've become very used to. First, that I look for is a big W. Where I really learned to follow big W's was after seeing too many bear flags that confirmed based on the technical confirmation. Like if you use the traditional technical rules of bear flags, right here it confirms, and this is your short entry. And while I think I'm good at recognizing flags, and I do kind of believe in the theory behind them, and I think it's also something that lines up really well with what Fibbo talks about, in that the bear flag really needs to kind of find resistance from this fib zone, otherwise it's no longer qualified. So this is something that I pay very close attention to, but time and time again, what I see is that you confirm the flag by breaking down this trend line here with the close below. And then instead of really accelerating and breaking down lows like Fibbo was talking about, you find some support at horizontal. So this is my roadmap. At first, I'm seeing an ascending triangle, waiting to see if it confirms. If it does, I'm looking for up here. If instead it breaks to the downside, then I'm looking for a big W, because a bear flag that creates a double bottom is a textbook big W. And this is where I talk about being like maybe a step ahead. Like it's pretty darn easy to recognize big W's in hindsight. I mean, relatively, let's just take a look at Bitcoin, for example. The one we were looking at right in here, where you've got the bottom, the rise up, the resistance from 0.618, the dump down. Here would be your confirmation of that being a bear flag. And then, boom, you just smash right through. And now, I mean, it in hindsight, looks a lot like a W, but if you're trading it as a bear flag and shorting it and really expecting prices down here, and then all of a sudden this happens, well, then you completely, you don't see any sort of W until it's too late or something like that. So when I see a bear flag, the first thing I think is look out for a W, because the W is a pattern that I think works very well in terms of if you get people shorting this candle on the bear flag breakdown, that's what most people look for is the bear flag. And then you kind of bounce back up right here is where is going to be the stop for the bear flag. So if you can take that out, now you wipe out the bear flag sellers. And if you can just move back up into here, now you get the breakout buyers to kind of buy in. And that's just kind of a pattern that to me works very well in trending markets to get, kind of bears in trouble here, and also kind of makes it tests the bulls who did a very good job of buying this dip. Has moved back down to test support. A lot of them are going to be having break even stop set and just kind of getting stopped out of break even before a good move or whatever the case may be. This W pattern is something that I very much believe in, and that's what I look for. First of all, when I see a bear flag. So as we are now still in the flagging pattern, I think that right in here we're going to see like this is the roadmap. The only way that a map has any value is if there's like kind of an X that marks a spot. Like first you need to kind of follow a trail, and then you need to have some sort of X that marks a spot. And for me, this is like right here. If we throw back kind of into this area and then break down lows, well, it's definitely at that point a bear flag. And if we instead are able to confirm a W needs to break out this high for it to be a W. If we can take out that high, then now it is, for me, a well-defined W, which is the first thing that I look for and expect. So right in here, and I guess even if we don't get there, like if we instead break down this low, then that would confirm as well. So like right here this is the sort of X marks the spot, and I don't really know what that spot will be. It's just, this is where I want to, this is the critical crossroad. This is where you will now, like before, it's like, yeah, if we confirm the flag, well, I'm going to wait to see if this holds. And well, yeah, this could be in the same time. Yeah. But now it's like decision time for me in my mind. And if we can take out 52, I'm going to be targeting 58. But if we instead fail to reclaim 50 and come back towards these areas, like the W has to be a W. It can't be let's see if I can make that a little bit clear. A W is a W. It's not like a triple bottom. So if we kind of move up here and then start falling back here, then no longer can that be a W for me. Right here, absolutely textbook, but it has to stay above here, and it has to move up consistently from here through this high without really, retesting the lows. So very important point for me. And if the W confirms, if we take out 52, then my target is 58. But on the other hand, if that doesn't happen, then I would be using the flag to measure the target using, this leg here and that breakdown there. And that would give me a move to 36. So I'm not yet having that as my target, but if we did, even on a wick, it could barely wick below 44. If it even wicks below 44.5, no, 44. If it wicks below 44, my target is 36. And if it closes a 4-hour below 45, my target is 36. If it wicks above 52.2, my target is 58. So very much that liminal space where it's just, I got to wait and see what happens. And as we were kind of looking at those parabolas earlier, this is definitely, if we do confirm that, my target would be 36, but I would be very much looking for some support to be found. Let's see, oh, it's a lot. From this parabolic support here, which we see, kind of connects to there, and there. And this was, a parabola that I was posting back in here. So definitely one I've been paying very close attention to for a while. Let's take that out here for now. If we do take out this low, this parabola is just waiting at 42, and that would be a retest of the prior high. So I'm definitely seeing a lot of support in this area, but I am also, seeing some reasons why it may not get there. If it doesn't get there, that would just be more bullish. If it doesn't get there and takes out 53, then that's the recipe for the opposite of what I was mentioning with myself of, kind of trying to sell. If there's a lot of people trying to buy here and it doesn't get there and it really starts creeping back up, now you get people chasing, to the upside. So definitely a spot where I would see a lot of support at 42, but I'm not going to be setting any orders there myself. And I will show you why here in 1 second. So if we pull up EMASAR, which is what I'm going to be using as my primary tool to signal an entry exits, right now we are on the entry zone. So if this doesn't hold, like this is where I want my orders to be set to try to catch some sort of sell-off. But if this doesn't hold, this is where I'm going to be looking to wait and see. This buoy, this is my estimated stop loss. This is where it just has to hold for the long-term trend, in my opinion, to stay intact. And that's also lining up perfectly with that parabola. So not an area where I'd just be having orders set to try to catch anything, but an area where I'd be paying very, very, very close attention to see if that does hold and keep that longer term structure intact. And again, this is the perfect sort of big W setup for me, where we test the beach, you resist the 50, you test the beach, and then you move up. That is exactly what I look for in a W with the beach test, 50 EMA, resistance, beach test. Let's see if we can just quickly find enough. Here's a good example here where we get this one falls all the way down to the ocean, but then resists the 50, comes back down, and then boom. So that W action kind of around the 50 EMA, maybe a little below, a little above, and the 200 EMA, a little below, a little above, and the 50, that's very much the setup for a big W, which I am seeing now. But this is a spot where I have been holding so much of my exposure throughout this whole trend that I am just going to be very, very happy with whatever happens next, and I'm going to be taking some time off. I'm just to take a lot of profit and take a lot of money off of the table. It kind of takes some time to sink in, and that's going to be basically what I'm going to be doing is really just kind of taking a step back and being very, very, very happy and grateful for the money that was made through this massive trend, and still keeping a very good amount of my net worth exposed, but making sure that I'm not keeping just more than I'm comfortable with based on the goals that I have and what I'm trying to accomplish. So, all right, that will do it for what I've got to look at, and I think that we covered a lot, already over an hour here. So appreciate everybody for sticking with us and tuning in. Any questions from you guys? Any last words?
I mean, a lot of the stuff that you're showing, just looking at it from a different angle and different patterns, just everything lines up really well with what I'm looking at also on my fib strategy, and it kind of works together. But I'm in the same boat. I was just looking at it from a different way. Like, you're cautiously optimistic also because it could be a possible W, a big W.
Mm-hmm.
But then also you're cautious because it could be a bear flag. And that works the same way with what I'm looking at too, because right now is if that 4 hour closes 3, settles below that 48.2, that's the confirmation to me that the bear flag is in play, and I wait for it to drop to the 42 level as a minimum, as the 42 level. Or if it doesn't and it holds, then what I'll watch for is a move out of my bear zone into the bull zone, and then 3 closes above my 38.2% level, which is 48.7. So if I get 3 settles above 48.7 and it moves into the RSI zone, that would be my buy of confirm for the W. Now the thing is it might confirm. It's kind of like when I looked at your stuff, for the last year or so. Sometimes you'll signal a little bit earlier than me, and then sometimes I'll signal a little bit earlier than you. And this could be one of those cases where that if I get 3 settles above 48.7, that third settle could be at like maybe right around 51 or so. And it's not quite 52 yet, but I get my signal just a little bit earlier than you do. But that confirms to me the W. So it's working in the same way, we're just looking at it from totally different strategies. So it's cool to see that the confluence between what you're looking at, what I'm looking at, and who will get the signal. The thing is that my third settle could be above 52 on that, and then all of a sudden we're signaling at the same time, that kind of thing. So it'll be interesting to kind of play it out and see what happens. But you're cautiously optimistic, just like I am, with a possible W or a move down on that bear flag. So this is kind of liminal space for me and you, kind of looks like.
I want to throw my hat in the cautiously optimistic. Like the fact is, support's there. I don't want it to get hit again, but the more we hit support, the worse it is, right? And the lower we go. So it's like I'm cautiously optimistic that these levels are holding, but bears have been chasing the book. So it's like, what can and one way or another, it has to be a break. And that is not a fair, that's not a good trade for me. That's like more of a fair fight. I like clear, obvious situations. And right now it's going to take someone to do a lot of work in order to, or a team, let's say the Bulls or the Bears, to do a lot of work to get out of this mess. I don't know who it's going to be yet. So I throw my head in the cautious optimism, hence the spot trading.
Yep, and I'll get even a little bit more optimistic if we can close this 4-hour candle above 48.3. That to me would be really, really good at this point in time from what I look at. Excellent. Not that we're there. I mean, we're a little ways away, and we got 2 hours to go. But if we get above 48.3 on a close on this 4-hour candle, it'll put me back above my 38.2% level, and it'll hold a couple of the levels in some of the other things I'm looking at. And it's not a buy signal yet, but it's definitely more leaning toward the optimism than the caution.
Excellent. Yeah, I love it. And I guess I'll clarify my stance a little bit in terms of saying that I'm mainly just neutral. I'm just kind of sitting back and waiting and waiting to see what occurs from here. The main reason why I am very, very cautious and not feeling comfortable with holding on to too much long exposure right now is due to the recent signal that we've seen on EMASAR. And the recent 4-hour EMASAR signal is the most profitable signal that we've seen on Bitcoin since 2016. And something that I haven't, I guess, shared at all publicly is that a main factor for how all of that works is looking at how long can moving average crossovers sustain. So like if a 50 moving average crosses above a 200, it can sustain for a long time. But how long can we keep a moving average crossover bullish? That's something that is very, very important to me because just how I think of things in terms of mathematically and once we get to that tail end of where we haven't, this is kind of getting towards the most we've seen a moving average crossover sustain over the last 4 or 5 years. That's where I really start feeling uncomfortable. This is where I should be taking a lot of profit. And then once it exceeds that level and sets a new record, well, what it does for me is kind of two things. It kind of tells me, okay, this is probably a good spot for me to take some profit, but also it's a huge signal of strength. In order to sustain a moving average crossover for a record level, that doesn't just happen for no reason. That must happen because of some underlying maybe shift in the sentiment of the market. And when we get a bunch of money printing and all this stuff happening, and then we see this record sort of trend based on how I follow the trends, It's a huge signal of strength for me over the medium to long term, but in the short term, it's a spot where I'm feeling really uncomfortable, thinking that these moving averages kind of need to reset, and it's a good spot for some cool off. But those good spots to cool off are often when you can kind of get the sharpest moves in the upside as well. So I'm myself just really square in the liminal space of just completely neutral. And I mean, if you had to put a gun to your head, for sure you got to lean to the bullish side with how strong this trend has been. But I'm just cautiously optimistic and pessimist. I'm optimistic both ways, but I'm just thinking caution is what I'm mostly focused on, which that has been the common theme.
Yeah. No,
So
that makes sense. That makes sense.
I appreciate
And,
that.
and another thing is like, one of the reasons that I'm saying that I'm slightly optimistic is if we get that weekly settle above 43K, it would not surprise me, and I'm sticking to this, that we could see 70 to 80,000 in the next 2 weeks. We'll get that sharp move to the upside, and then we'll probably go through a death spiral through the rest of March as everybody tries to pay their taxes. But I mean, not say that it's going to get there, but it would not surprise me to see 70K by mid-March if we close this week above 43K.
I love it, and I'm with you that if there's anything that you give me that surprises me, I'm going to start to think, oh shit, that maybe that's reasonable. So like right now, nothing should surprise anybody. If
that's true.
You're sitting there at home thinking that 20,000 Bitcoin would really surprise you and really change a lot of things, give that some thought. And for me or anybody else, I mean, if you're going to be surprised by 70 or 80K Bitcoin in the next month or two, I mean, what have you been looking at over the last few years that would make that be surprising to you? So there's anything can happen, and that is exactly why it's not many times the market can just make these huge moves in such short amount of times, and that is why we were talking so much about just looking to limit risk and it not being a time to trade on leverage. And anything can happen as long as you're kind of willing to accept that yourself and really believe that anything can happen, then you're already kind of thinking a step ahead as far as I'm concerned. So I definitely appreciate you saying that as well, and also having an objective level where you're looking at close before you would actually start to think that that's reasonable, opposed to just something to keep in mind. So yeah, another great show. I think we got into a lot of really important stuff, and hopefully the viewers were able to get something out of it. And I guess I've about had everything that I've had to say. You guys have any last words?
I guess I'm gonna have to buy a hookah.
Yep, you could just get yourself like an incense burner, like
there you go, something. Yeah,
you need something to spice up your atmosphere.
There you go.
All right, well, Joe, great to see you as always, and I'll maybe need to spice up my wardrobe to get some nice designer clothes like you got there. I think we've all got some moves to do, except for Joe himself. He's just always sitting there. Cool Joe, that's a brand. Smoking Joe, Cool Joe. I like both.
Joe Cool.
Joe Cool. There we go. All right.
That was like a Snoopy thing.
Yes.
Yeah,
Yes,
pretty cool.
that's what I was looking for. Joe Cool. All right. So it's Tyler Coates, Fibbo Swanee, and Joe Cool signing out for this week's show. We'll look forward to catching up with you guys next time.
All right. Later.